What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame, Got Mortgages. We have got a jam packed agenda that we are going to cover today. Last week is probably one of the most critical data weeks in quite some time. We had updates on personal consumption expenditure report, labor market. We had a little bit of insights in regards to what the Fed's preferred inflation measure was and all that fun stuff. So I'm going to dive right into it, starting right from the top with the BLS report, the infamous report that comes out every Friday. We saw only 177,000 jobs were created, slightly exceeding expectations. But the one positive note is since January, unemployment rate was relatively flat. 58,000 jobs were revised from the prior month. That is huge, right? So, again, although this quote unquote surprise of 177,000 jobs, really, I don't necessarily think as truthful as it is, right? Because proof is in the pudding, right? I mean, we're seeing consistent downward revisions. January by 32,000 jobs, February by almost 50,000 jobs, March by 43,000 jobs. You add those two together, and you're way off. And I think April's going to follow that pattern. Actual job growth is going to come in significantly under those expectations. So they follow again that birth death model. Estimating small business job creation again added 393,000 jobs, really contradicting ADP report, only adding 11,000 jobs. Another concerning trend, again, is the average unemployment duration, 23.2 weeks, right? Obviously showing a little bit of signs of persistency when it comes to the labor market. Now, on the ADP report, pretty much the exact opposite, right? Only 62,000 jobs created, 4.5% job stayers with a pay increase, about 6.9% annual for job changers, right? So, of course, showing a little bit of flexibility when you're looking to leave a job and obviously take it for a higher pay. 62,000 positions, as I said, well under by pretty much a little almost close to half of what the expectations were. Large companies only added 12,000 jobs, right? Those over 500 employees or more. Again, unease is a word of the day. Employers are trying to reconcile policy and consumer uncertainty with a run, of course, of mostly positive economic data. Now, shifting the stance from employment to inflation, PCE report came in actually dropping 2.3% on the headline, 2.6% on the core. Month over month, again, relatively flat. Annual core rate, if we look at the 6-month and 12-month reading, kind of see 2.9 and 2.6, really getting closer to what the Fed's target is of 2%, right? Consumer spending obviously jumped up by 0.7% in March. Again, obviously, as we're starting to see shoppers look to get on top of and ahead of tariffs. Bottom line, again, shelter costs remain key to reaching that Fed's goal of 2%, making up about 18% of core PCE. Costs obviously remain relatively high and relatively still over expectations. PCE catches up again to real world rental content as we continue going on. Home prices. So if we look at Case-Shiller, once again showing increases year over year on a national basis, 3.9%. And if we look at certain cities, we're looking at over 4.5% on top of all the gains we've already seen, right? Again, wide expectations. Case-Shiller is the gold standard for tracking home appreciation and really expectations. National home prices jumped up 3.9%. Major cities, again, at around 5.2%. FHFA showed a little bit of an uptick also of 3.9% year over year, 0.1% month over month. Case-Shiller, again, reports home prices really showing that resilience. Like I had mentioned, if you own a $600,000 home, appreciating at 4%, you've gained $24,000 in 1 year, right? Really good return on your investment, obviously. Other stuff that we look at, U.S. economy when it comes to the GDP report, declined 0.3%. Again, contradicting really the streamline of obviously what the tariff implementation is going to be. Housing market, we see pending home sales, signed contracts on existing homes jump 6.1%, 2 consecutive months of jumps. Labor market, again, showing signs of weakening. Initial jobless claims hit the highest level of 241,000. Continuing jobless claims, also the highest level, November of 2021 with 1.916. Job openings fell to 7.192, again, showing continuing decline since 2022. And then what we got this week, not a lot, but we have the Fed meeting, right? The Fed meeting is they started tomorrow. Again, we'll see the expectation on Wednesday. A lot of different features when it comes to monetary policy. And then, of course, the conference that we'll see after that. So quite a lot that happened last week. What we are expecting heading into this week, you can kind of see interest rates pretty much over the last month or so has been relatively flat, 1 week up, 1 week down. And you could basically see here really a little bit of a seesaw, so to say, right? Start of the month, relatively between 6.8 to 6.7. Now we've kind of rode a little bit of that wave. tick just to shy over 7%. And you could tell here we've been battling really since the last 2 weeks or so at that 6.9% mark, relatively seeing that flat, no change of the market. So a couple different aspects for us to keep in mind. So as always, we will keep you guys updated. Hopefully we'll see a little bit more data, a little bit more insight as to what the Fed is planning on doing as we continue interest rates start to slowly creep down and take it from there. Appreciate you guys tuning in, and I'll talk to you guys soon.